Morning, Top Gun here, Monday, November 15th, 4:30 a.m. on the West Coast. This is the YouTube pre-market commentary. The week ahead, interest rates, earnings, NASDAQ 16,000. Okay, so on Friday, October 22nd, the legendary hedge fund manager David Tepper had a very interesting interview with Scott Wapner on CNBC's Fast Money, where he said that he really was not very bullish on the stock market, but that we could have a trader's rally into year end. And he thought the determinative factor of if we would was interest rates. If interest rates stayed about where they are, he thought we'd probably get a trader's rally into year end. Whereas if they started to rise, we might not get it, and in fact the market might go down. So last week was interesting on the topic of interest rates, because the October CPI report on Wednesday morning came in hot, with headline inflation up 6.2% year over year and 0.9% month over month. So this caused Treasury bonds to sell off and interest rates to go up, because they're inversely related, which then caused tech stocks, growth stocks, especially tech stocks, to sell off, because they're very interest rate sensitive, because their earnings are out in the future. So the discount rate goes up when interest rates goes up, and the present value of future earnings goes down. So we had a nasty sell-off in the NASDAQ, and then the precious metals what took off. So it's going to be interesting to see if this inflation trade persists into this week, and how that affects the stock market. Okay, moving on. We have some important earnings this week. We have Walmart and Home Depot on Tuesday morning. These are two $400 billion retail behemoths. Home Depot is especially interesting to me because the housing market is so hot, and Home Depot is at 52-week highs essentially. And of course it's not cheap at this point. So let's see how the market reacts to that. On Wednesday is the most important earnings report of the week, with Nvidia, $770 billion semiconductor maker that has become the hot stock in the market. So Nvidia is actually up about 50% in the last month. So clearly it's trading on momentum, not fundamentals, at 74 times analyst estimates for this year's earnings. But that doesn't mean it can't go higher. So let's see how the market reacts to its earnings report, and that will have implications for overall market direction. Okay, then finally on Thursday afternoon we have Applied Materials, Workday, and Palo Alto Networks, which are three important tech companies, not generals but soldiers. But it will give us some insight into how much breadth we're going to get in this market, as a lot of stocks have been falling by the wayside beneath the surface. Finally, I just want to talk technicals. The NASDAQ has not been able to close above 16,000. A close above there suggests that we are going to rally into year end, whereas 15,500 was support on Wednesday's sell-off. And the 21-day moving average is also rising up to 15,500. So that range of 15,500 to 16,000 is significant. The NASDAQ closed around 856 on Friday. So we're towards the top of that range. Let's see if it can push through. All right, have a great day.